Well, good evening, and welcome. Thanks for spending some time on a rather cold Sydney evening. It's below 10 degrees. It's raining. The dogs didn't want to go out for their walk this evening. It was very funny. I had to persuade them really quite hard, and it didn't take them for a very long walk, but I got very wet. Anyway, great to see you all here. We're just in pre-show mode for a moment or two, and the good news is we're all set up, we're ready to go. Adam's with me, and we're going to look at the nether regions of crypto tonight and think about where is it heading, what's beyond crypto, and you could think about beyond crypto in all sorts of cryptic ways, which is why I chose the title. So it's all very good. And nice to see so many people on already. Hi, Abono Steve, and good to see everybody on. Thanks for that. And I won't spend time going back over all of the chat, but just a couple of things I'll say. In terms of my next chat with Nugget, not sure. We try to do it roughly monthly, but it varies a bit depending on his calendar. I haven't got a time day yet set, but hopefully soon. And Vanessa says it's cold in Melbourne too. Yeah, the whole southeast of Australia is getting a bit hit, and it's wet, it's cold, it's windy, it's winter. What do you expect? But I have to say, of course, that winter in Australia is nothing like winter in the UK, right? No snow, don't get any frost here, so it's not really that bad. So, and of course, with so many computers running here down here, it's always warm, it's always warm in the studio anyway. So that's one advantage, I guess. Oh dear. And Beige says that bring back the beige shirt. Yeah, maybe one day, maybe one day. At the moment, I'm in blue mode, so that's all good. Okay, I think we're pretty much ready to go. As somebody else has just chimed in to say Cairns is also a bit cool in the evening. Yep, well, I remember going to Darwin in the middle of winter, and I actually got cold in Darwin, which I thought was hilarious. So it just shows it can be done even there. All right, I think that's enough preamble. I'm going to take the pre-show off. I'm going to run the intro, and then we'll be back with the main show. So stand by. Well, good evening and welcome to this live stream event on the 8th of June 2021. Last week I said January by mistake, so I was out by 6 months, but what the heck. Anyway, great to have everybody on board, and thanks very much for spending some time with us tonight. It's a very interesting and important conversation about the future of crypto. And of course, the markets are quite wobbly at the moment. We'll touch some of those as well. Just before I go, as normal, bring Adam in, let me just go through the quick comments about we're not providing financial advice here. This is just a general chat, a general conversation. So if you need specific advice, go talk to a financial advisor. We don't know your individual circumstances. Also, the chat room is moderated, so please play nice, no racial slurs. This is as at the 9th of June. 9th of June? What? 8th of June, come on. Close, but no cigar. Do use @WalkTheWorld to get my attention if you want to ask a question. That's the best way to make sure that it's up the top of the list. And also I have enabled Super Chat, which allows me to take those questions right to the top. So if you want your question at the top, that's one way to do it. The other way, of course, of making a contribution to our work, we don't do this for profit, we do this because we think it's important to talk about this stuff. You can make a contribution via the Super Chat, so that's a couple of options there. And so without further ado, I'm going to bring Adam in by pressing that button. Adam, hello, are you there?
Martin, great to see you. How are you?
Yeah, very good. How are you going?
Cold, also here in the National Capital. I've got Dino the Wonder Dog next to me in his little thunder jacket. He's not leaving my side, so hopefully the thunder holds off during our discussions this evening.
Right, okay, yeah, stormy dogs, thunder dogs, not good. Well, look, it's great to have you back on, and, you know, I think we had a chat in January, right? And then, of course, from there, cryptos went through the roof. Bitcoin hit, 65 or something, so it's come back a bit. So I guess a good place to start would be for you to introduce yourself, but then I'd also like to get your sense on how you're thinking about the world of crypto at the moment, and do you see this as a blip? You know, it's a great time to buy because you're buying the dip, or is it something more substantive? What do you think?
Well, first of all, thanks for having me back on. It's great to speak with you. For those of you who haven't met me, I'm Adam Stokes. I host a crypto channel called Adam Stokes. I'm also the author of 28 Pro Trader Tips, available on Amazon if you'd like to get that. Available in Australia, just being started to be printed here. It was only being printed overseas, but now Amazon has expanded to printing in Australia, so it makes it a little bit cheaper and a little bit quicker when it comes to delivery. Now, onto the markets, Martin. I'm looking at the charts as I speak to you now. We've had a big pullback, and we seem to be getting this resistance line around the 70,000 Australian dollar mark, and then it's now pulled back almost 50%. When we actually zoom out, we need to ask ourselves, the one question that many people come to me with is, knowing that I'm in the crypto space, is they say, oh, I hear crypto has dropped. And most certainly over the last few months, it has dropped. And the danger that we're facing at the moment in the crypto space, going from a bull market to a bear market, is the death cross. And that's where the 50-day moving average crosses over the 200-day moving average. And unless we get some support shortly, we will get into that death cross situation, which doesn't mean that it's the end of Bitcoin. It means that we, in technical terms, move from a bull market to a bear market. So at the moment, we can see that we've had, what's been different in the crypto market at the moment is that typically Bitcoin leads the charge and everything follows after that. The altcoins follow Bitcoin's lead. But most certainly in the recent patterns, we've seen that we're getting very distinct markets, and we'll talk about some of the stable coins a bit later on in the show, Martin. But what I've really observed is that we can see that now Bitcoin isn't as connected to all the altcoins as it used to be. So Bitcoin's been around since 2009. And then we had a big flurry of altcoins. 2017 was a big push for all these altcoins. And there seemed to be a very clear correlation between whatever Bitcoin did, the altcoins did. Now, although we can see the entire market in red today, what we do see is the pattern of these correlations separating. And the reason why that's happening, Martin, is because we can see that these altcoins are really starting to deliver on the technology that they've been aiming to deliver. That is, remember, Bitcoin is a store of value and a global payment system, whereas altcoins can do all of that, and depending on the coin, and a little bit more. So Ethereum has been the big talk of the town recently, and we can certainly see Cardano will be competing with Ethereum, but Ethereum's already delivering. Cardano should come up and deliver once it launches, but of course we have Ethereum 2.0. I will be very interested to see what happens over the next 30 days.
Yeah, well, this is interesting, and I just want to show this chart because this is actually the overall list of currencies. Right, there are 5,683 coins listed on investing.com. Right, just a small number, right? And the total market cap is 1.4 trillion US. Right. So that's just sort of giving you a bit of a sense. Now, when we spoke around the beginning of the year, it was about 1 trillion, right? So the total value in the crypto world is up significantly from where it was back in January. So that's just worth reflecting on that. The second is, of course, that the main 2 or 3 coins, so Bitcoin, Ethereum, and Tether, the top 3, a couple of them have dropped. Tether hasn't, and we're going to talk about Tether a bit later because there's some interesting questions there. And it's quite interesting because there are some people who are effectively arguing that this is the end of Bitcoin, and the whole thing is looking pretty wobbly. There's a couple of articles that pretty much have come out and said, well, it's all over Red Rover, right? But then there are others who say, no, you've got to understand that this is still part of this revolution that we're in the early days of. And, you make the point about altcoins, right? It'd be good to just get a bit of a definition thing going on. What do you mean by altcoins? Because some people may not know. The point is, this is a universe. This is a universe of different types of things. It's not all the same a DNA, is it?
That's right. So I'll just backpedal a little bit and talk about the death of Bitcoin. So there's a site called 99 Bitcoins, and it has a Bitcoin obituaries. And as of today, Bitcoin has died 416 times. So every time we see this massive pullback, this site Bitcoin obituaries, it's very good. It lists every event that Bitcoin apparently dies and pulls back. But of course, this thing can't be killed. It keeps moving forward, and we can see this growth of an average of 200% per annum for 12 years, even with those pullbacks. Some years are, of course, bigger than others, and other years we hurt, particularly if we've come out of a long bear market. Now, the other thing, just before I answer your question about altcoins versus Bitcoin, is that market cap that you mentioned, it's a very important point. So for many years in the crypto space, we were wondering if Bitcoin or crypto would ever cross the $1 trillion mark. And not only did the entire crypto markets cross the $1 trillion mark, but Bitcoin itself, just the store of just Bitcoin, the market cap for Bitcoin was in excess of $1 trillion. And recently I did a video on how much money there is in the world, and comparative to many markets, particularly the derivatives market, that amount is absolutely nothing. So as we move through the crypto timeline, we talk about Bitcoin dominance. So moving on to your question about Bitcoin versus altcoins. So essentially Bitcoin was first. Yes, there was some other cryptocurrencies, but for the argument of crypto as we know it, Bitcoin was essentially born in 2009. And since then, other coins have come to the table. As you mentioned, you saw a list of around 5,000. It's really hard to gauge how many cryptocurrencies there are in the world, but essentially we're looking at around 10,000 cryptocurrencies in the world at the moment. And we saw those market caps at the top at the moment is Bitcoin is number 1, Ethereum is number 2, Tether is number 3. And the reason why Tether is number 3 at the moment, Tether is a stable coin where that value of Tether is pinned to the US dollar. So the reason why Tether has slotted up to position 3 at the moment, and that's only recently it's done that, it used to always sit around position 3 or 4, but when the markets are doing really well, what people do is they pull money out of the stable coin and put it into other cryptocurrencies. When the market is going down, as we see at the moment, we can see people pull their money out of Bitcoin and other altcoins, and they put it into a safe haven, into like an island, if you will, which is Tether. That's one example. You also have USDC, and there are other stable coins there. So,
Adam, just a quick question. Somebody on the chat asked, EVZ asked, are stable coins included in the crypto market cap? The answer is yes, isn't they? Are
yes,
included.
it is.
Yeah?
Yes, it is. Good question.
Yeah. And then the other point, just on that, you're right. There's a lot of drifting into those stable coins at the moment, which is why the throughput on Tether, let me put that up for a second, right, is actually more than the others. So the volume in the last 24 hours on Tether was 82 billion, compared with 35 on Ethereum or 39 billion on Bitcoin, right? So that's your point, isn't it, about the fact that people are actually going to the safety at the moment because of the uncertainty on some of the other coins.
Absolutely, and you'll see similar volumes on USDC, which is ranked at number 8, looking at the site that I'm looking at the moment, looking at your site. Yes, that's at number 8 as well. And it's exactly that. It's because there's thousands of cryptocurrencies out there. If you're a trader as opposed to an investor, when the markets get rough, you pull your money out of those other altcoins and even Bitcoin, although the Bitcoin enthusiasts would very rarely sell Bitcoin. Even if it's going down, they're trying to accumulate as much as possible, knowing how powerful it is, its position in the charts, how scarce it is with only 21 million coins, 18.5 million in circulation, possibly 4.5 million, maybe even more lost. So we could be looking at a total supply of something as little as 15 or 16 million Bitcoin. But yes, when the markets go down, typically people pull their money out of the other coins and put it into a stable coin such as Tether. But what's interesting, Martin, is when we look at the global remittance payment system where people are sending money around the world, what they're discovering is that particularly in Asian nations, is that Tether's very popular in Asian nations, where they send money from one country to another without using a bank, without using the SWIFT network, without using Western Union. They simply put their money into crypto. They buy a stable coin, so people don't have to worry about, oh, is this money going to be worth less or more tomorrow? Because a stable coin is exactly that, stable in the sense that it's pegged to the US dollar. And then they can send this money around the world virtually for free without any friction or without any limitations that banks or third parties such as Western Union may put in place.
Right, and that's the point, isn't it, about the purpose of these coins, right? There are a range of purposes, right? So some are payments, some are effectively a store of value, some are effectively more platforms. You know, I mean, Tether, I think, is on the Ethereum platform, right?
Yeah, and the analogy I give with that is that, let's think about the internet. The internet, when you first got into the internet years ago, internet's kind of been around for most of my life, but when the internet came in, we really thought about the internet being about email. But of course, email is merely one application on the internet, just one application of all the things that we can do on the internet now. And crypto, if you're looking for a similar analogy, is that Bitcoin is merely an application on the blockchain in the sense that it is a global payment system, a store of value, a way that we can move money around in a decentralized, immutable, open source, borderless system. But then you have other cryptocurrencies that can do exactly that, but a bit more. Ethereum and Cardano that I mentioned before. The reason why I mentioned those two is because, first of all, they're both in the top 5. Second of all, they are arguably the most popular of the smart contract coins in the crypto space. But the next point on those coins is that, in fact, we believe as investors that Ethereum and Cardano may, not financial advice, give us the best return or the best bang for our buck. However, there are competitors to these smart contract coins, such as Polkadot. That's another one that's coming up. And you can see Internet Computer and Chainlink. I just want to touch on Chainlink for a moment. Chainlink is another example of a coin that can do many things. So these smart contract coins that will do many real-life applications, they need many different data sets. They need many pieces of information to feed into their smart contract. And a coin such as Chainlink, it has the ability to link different chains, hence the name Chainlink, and link different pieces of information into these smart contract coins. Now, for us, the crypto enthusiasts out here, we're not so much focused on the price. Certainly, if you're a trader, the price, you're worried about it. But if you're in this for the long haul, as many crypto goers are, and you understand the technology around this, we're not so focused on price. And the irony is, I was in preparing for today's discussion, I thought I hope this market picks up a little bit more before I speak to Mark. Noting we have very different audiences, which is great, which is why I really like working with you, because this is what diversity is about, bringing in different audiences and meeting in this overlap of technology. Of course, our journey together, Martin, really begun with the cash ban. We were both after a resolution with a cash ban, which we achieved, and not alone, of course. Many people were out there to make sure that the cash ban wasn't enacted. But as we, I think, go through our crypto and YouTube timeline together, we're actually starting to see that more and more of our audience's interests are overlapping.
Well, that's right. And, it's fascinating, because the more you think about this, right, the more you realize that just thinking about the crypto world as a speculative, make a quick buck sort of thing, which is some people are, and some people trade it, some people trade liquidity. And of course, it's interesting that a lot of the investment banks have started coming out saying, well, the volatility is so huge now that it's not really that reliable in terms of an investment class, because you don't know what it's worth, right? But trading the volatility is what a lot of people are doing, right? And there are various options on the cryptos which are actually also quite productive at the moment for those who trade volatility. But that is a section of the market. Then you've got this other section which is effectively saying, no, this is about the formulation of a whole new environment down the track, and we're in the early stages, right? Now those two things, I think, pull in quite different directions, don't they?
Yeah, and look, you raised a really good point about the volatility. So there's a saying in the crypto space, the price of extreme performance is extreme volatility. Now, if we look at olden day trading, I speak about this in my book about leverage trading. So if you look at trading, say, precious metals, where you only had a few percent movement in a year or a day or a week, those few percent movement, if you were a trader, you actually needed to create a better return on your buck, or a better return on your time and money that you invest, by putting leverage onto your margin trades. Now, of course, in crypto, because these market caps are so small, that volatility is so easily achieved, in the sense that when you've got a very small market cap, the easiest example would be if you have a market cap of $1 million and I come into that market and put $1 million into that market, I've now doubled the market. And so straight away, that's a 100% increase. But of course, if I were to put $1 million in the derivatives market, or $1 million into the gold or even Forex markets, nothing really happens. So you needed to put this leverage on top of those trades to ironically, Martin, to get the volatility that crypto gives you. If you're a trader, remember, because there's a difference between trading and investing. If you're a trader, that volatility was automatically there. Where some people get absolutely wrecked in the crypto space is that they treat cryptos like olden day markets, and they put the leverage on top of that, and then they get destroyed. But going on to global payment systems, when we look at, could this be a currency for a country? Well, absolutely. And as we progress through the crypto timeline, the volatility in the big market cap coins reduces significantly. So at the moment, we can see that Bitcoin, yes, it's pulled back in the last few months, but when Bitcoin was very young, you would see a 50% drop or increase within hours, within days. As we progress and the crypto market caps get bigger and bigger, the bigger coins become more stable. And as a result, we can see that some countries are exploring using Bitcoin as their global currency.
So, Salvador?
All right, a little good segue into there. Yeah, lovely. So El Salvador does not have their own currency. They use the US dollar. And you really have to appreciate what El Salvador is doing. They are at the point now that they can see that the US dollar is being printed into an oblivion. It is just being printed beyond comprehension. So really put yourself in the shoes of the good people of El Salvador. The president there has said, they've put a bill forward. The bill hasn't passed yet, but if the bill is passed and just 1% of the population of El Salvador adopts Bitcoin in particular, their GDP could increase by 25% in less than a year. A GDP going up 25% in a year by simply adopting a better currency is nothing to be sneezed at. And we can actually see that other countries, mainly South American countries at the moment, are looking at the same model. Why are we continuing to adopt a fiat currency that is printed beyond comprehension, without any limits, without any consequence seemingly in the short term, when we have a new alternative. Before they didn't have the option. They did not have a Bitcoin. It did not exist. But after this 11 or 12-year experiment has progressed, there has been more global interest in Bitcoin. It is becoming more scarce, and there are more players in there trying to get hold of this asset. It makes perfect sense that countries would consider not using the USD and instead either using their own currency or using the true global payment network with true scarcity, that is Bitcoin.
And that, of course, is the interesting evolution question, right? Because the US dollar is still that reserve currency around the world. There's a lot of debate about the future trajectory of that. As you say, lots of dollars being printed out of nowhere at the moment. And yet it is still reserve status. And again, then the question is, well, how does that play out? And we'll come on a bit later to the Bank of England, because they actually released some papers earlier this week, which included some commentary around some of these stability issues. But before we go there, I want to come back to Tether, right? Because there is a lot of stuff relating to Tether and the fact that, auditing, not much, been warned in the US a couple of times for some of the things that they've been doing. So give us the inside story about what Tether is and what some of the issues are that have been talked about. Stablecoin, it's pretty, flat all the way because it's tied to the US dollar. But what is it really?
Okay, so in the first instance, there is more than one stablecoin, and I've actually released several videos on Tether in particular. Now, there's kind of different groups within the crypto community, and many of us actually push more towards the USDC, and the USDC is a stablecoin, but it is more audited and more reliable, we believe, than something like Tether. Years ago, when Tether was first released, I was greatly concerned about the coin. Why? Because they said that it was backed 1-to-1. They said for every USDT, for every Tether that they put in the market, there was a US dollar sitting in the bank, so 1-to-1. As we progressed through the crypto timeline and they started printing digitally more and more Tether, the people started to get nervous and said, prove to us that you have $1 for every Tether that you've got out there. Then as they started to expose Tether a little bit more, they discovered that in fact there wasn't a 1-for-1 link to the USDT and USD. There was in fact paper money linked to it. That is, that we're good for this. We've got these bonds or these stocks or these valuations that we can actually cash out this thing and we can make sure that we have 1-for-1. Ironically, it goes to the situation that we've got with fiat. There is not 1-for-1 fiat, as in digital fiat, as with what is linked in the bank. So if everyone went to the bank and withdrew all their cash from the bank, there is not enough money in the bank to pull that money out. What we're discovering with Tether is that even though we've been very nervous about Tether for many years, the crypto goers out there, is that it's in fact proving its worth in the crypto space, in the sense that, one, it's a safe haven where you can go and jump out of the markets and sort of stay in crypto per se by pulling your money out of normal cryptos and putting it into a stable coin. Two, it's a very good remittance payment system around the world where you can push money around the world with the frictionless payment systems of crypto. But three, we haven't seen a situation where everyone has done a run on USDT. No one has all cashed in their USDT at any one time. So the truth is, Martin, I'm in two worlds about Tether. Had you asked me this question 2 or 3 years ago, I would have straight out said, it's a scam. It's going to destroy the crypto markets. It should never have been allowed to proceed. And I'm very worried about it crashing Bitcoin. And the reason why I would have said that is because what was happening was there was one company that was printing USDT and then going and buying lots of Bitcoin with it. So it seemed that they were making this money out of thin air, similar to fiat, making money out of thin air, and then buying to buy real digital gold. And it's a similar model to what we see with fiat. Fiat is printed out of thin air. We don't even have to make it physically printed. We can just do it digitally. And then the good people of America can go use their printed US dollars to buy physical gold. There was a correlation, we believe, that the USDT was doing the same thing. A central body was printing USDT and they were going to buy the digital gold. But as I mentioned, now we have competitors to Tether. We have other coins such as USDC, which is the only stable coin I use. And it's certainly a stable coin that I use to get good interest. So instead of keeping all my fiat or all my money in fiat in a bank, I transfer it to a stablecoin such as USDC, then put it into a lending platform or a platform such as BlockFi, which will give me a far better interest rate than the banks. In fact, if you had any money now, and even if you want to test it out, you put a few hundred or a few $1,000s into a stable coin, you transfer that stable coin to a site such as BlockFi, of which I don't work for, so I'm not plugging a site that I've got any affiliation with, and then you start earning 7 to 8% per annum, which is far better than anything that you could get with in a fiat saving system.
Right, and we're starting now to sort of get into what I wanted to explore, which is that there's a bunch of come back.
My dog, sorry.
I thought you'd run away.
No, I warned you. Good boy, Dino.
No, that's cool. So the interesting question is this, right? You're starting to talk about some of the constructions that you can build when you effectively understand the way that some of these different interactions across cryptos work, right? It's a whole different ball game from just speculative investment in a particular one like Bitcoin, right? Because what you're actually doing is starting to use the functionality that's actually implicit across those multiple coins to do things, right? And that's sort of taking us into that conversation about how the financial system could evolve potentially, right? Do you need banks the same way, right? Because you can have decentralized and devolved finance and all those things, right? And that's what you're beginning to touch on here.
Exactly. So we simply do not need banks anymore. I realize this is initially very difficult to grasp. So when we look at horse and carts, for example, and I mean that with quite absolute sincerity. When we looked at the transition from horse and carts to cars, you'd say, well, why do we need cars when we've got horse and carts? And the same analogy applies now to the financial system. Why on earth do we need banks when we've got decentralized finance? Sure, going back to the horse and cart analogy, there are some people who still ride horses. There are still horse and carts that have some sentimental value, and olden day people like using them. But essentially, we have a new payment system around the world, and we have a new global financial system, which is cryptocurrencies. We have the internet of money, where we can move money instantly for almost free around the world in a far better method than what we've been using for years. All technologies have kind of evolved over time, except for the banking system. And there's good reason for that. Why on earth would you want to evolve the banking system when you have a complete monopoly over everyone's money everywhere for all movement around the world? And that is why banks are desperately terrified of cryptocurrencies. It's also why banks are buying up cryptocurrencies in the background, because banks are not stupid and they understand that this is a far superior product to anything that they can do out there. So you will see banks using coins such as their own, where they will create their own cryptocurrencies to move money around the world. There is argument that XRP will be the bank's payment system around the world, where it's a huge liquidity pools, very quick, superior technology. We are already using digital money in Australia, of course. I actually used cash for the first time on the weekend, and it just felt so foreign to me. It felt so foreign to hand over a pineapple as in a $50 note. And of course, this just goes back to what we've spoken about before, Martin, is that we are already using digital currency. Just as we were already using transportation systems in the past, why would you use an inferior transportation or payment system when you can use a superior one that is more efficient? The other thing to consider is that it's far more transparent. We don't actually know how much money there is in the world. We can estimate it, and we can see that recently, since the United States, the M1 and M2 money supplies, they've stopped supplying data for it. Why? Because essentially not even the United States knows how much money they've got anymore. Whereas with Bitcoin, as an example, I can tell you exactly how much money is in circulation to the 1/100 millionth decimal point. So 1 in 100 million. So a Satoshi to the 100 million Satoshis in a Bitcoin. And that's how detailed we can get this money. Now, unlike also the USD, we can't just print this stuff for infinitely. There are only so many Bitcoin. And unlike other cryptocurrencies, Bitcoin has no leader per se. There is no centralized body. There is no government. There is no board or director that can change the code. It is what it is. And in fact, that's what makes it so attractive to so many people, because we all know what we're getting ourselves in for. One quick analogy I'd like to give, Martin, is that if I were to say to you, here's 10,000 US dollars, or here's $10,000 worth of gold, or here's $10,000 worth of Bitcoin. You're allowed to have one of them, but here's the catch. You're not allowed to spend it for 10 years. The more people you ask this, most people would say, I'll take, if you say you can spend it this week, they'll take the dollars because they can spend it this week. But if they realize that they have to hold on to it for 10 years, they can't deny the performance of Bitcoin. And of course, not only are individuals, retail investors, and banks waking up to this, but now we can see with El Salvador, countries, governments are waking up to this. And when governments have a more rational financial system, they themselves will act more rationally.
Well, we've often said, and I'll say it again, I think we're at the very early stages of the evolution. We're in the foothills, right, of how this is going to play out. But you can begin to see some of the elements that could shape the future. And of course, we'll have to come on shortly to talk about central banks and how they're thinking about central bank digital currencies and how they are seeing risks to the sky, particularly around Bitcoin. I mean, Yellen a few weeks ago said she was very concerned about the money laundering and the risks attached to Bitcoin, the speculation. The Eurozone ECB there has also said the Euro Bank there has said the same. The in the Bank of England has been talking about this too. So that in that sort of sphere, right, the old world, the current mode of operation of the banking system, right, is looking over the parapet and they say, we don't like what we see, right? Now, that doesn't necessarily delegitimize those future states, but what it is recognizing is this is a very different way of thinking from the current state. And the reason I want to make that point is that there was a bit of research that came out very, very recently, in fact, which was surveying Aussies about what they're thinking about crypto, right? And there was a very strong age thing here that a whole bunch of younger people, millennials in particular, were saying, investing in property, can't do it, it's just way off, right? But actually cryptos look exciting and interesting, and that's where we're going to actually spend some time and effort. Whereas a lot of older people, boomers, for example, talk about the risk of volatility. They don't understand it. They don't want to get involved, although few are, but not many. So my question to you is this just an age, evolutionary thing? In other words, are we in that sort of stage between old world and new world, right? And just give it time, the new world will evolve. Or is it more complicated than that? I'm just trying to sort of understand whether it is really just, boomers versus the rest.
That's a really good question. Now, first of all, I'm going to defend the boomers because I do private lessons and private tuition and private coaching in the crypto space. And some of my clients are older millionaires. And why they are so successful in what they're doing, and multi-millionaires, a couple in particular, the reason why they are grasping this, of course, is that they realize it's an investment, but most financially successful people, not all, but most financially successful people have the humility to remain curious, and they want to understand how are these things working. Now, when we're talking about the generational gap, putting curious millionaires aside, young people understand the digital space. They understand digital assets because that's all they've ever known. And the best example I can give is games. So in games, you can buy things called skins. Now, I'm not a gamer, but I completely understand why this works, because when you are in the digital world, you value digital assets. Now, that digital asset might be a gun that you want to paint pink, a shirt that you want to put your logo on, or something that is unique to you in the digital space. Now, just as some people can't understand why others will pay $1 million for a Pokemon card, and others can't understand why anyone would pay $100 million for a Mona Lisa painting, the value comes from the people who are willing to put money into that asset. And the older generation, just as they originally struggled moving into digital information, that is moving information around not via Australia Post or a postal service, but simply by a computer, that is email and text messages. The younger generation, of course, would say, well, why would I write a letter and put it in the post when I could just do it on my phone digitally? As we expand this digital space to digital assets, which is kind of what NFTs are. If we look at NFTs, non-fungible tokens, where people are spending a lot of money, unforeseeable amounts of money, on a digital asset that you cannot hold, of course, the younger generation, they will know nothing else but digital assets. There will be some physical assets around them. But if a young person cannot get into the real estate market because residential real estate has been monetized, as opposed to, and what I mean by monetized is that the residential real estate market is monetized to the point that we've pushed out young Australians and internationals into buying their first homes, something they can live in. And that's because we're treating these markets as an investment market as opposed to a market that you can live in. If we push more money and more focus into the digital space, you'll actually, as Michael Saylor was saying, I'm taking from one of his speeches, you'll actually see people to be able to get more bang for their buck in the real estate market. They'll get more house for less cost. They'll get more gold jewelry for less cost, because the monetized markets will be the digital markets, which are scarce, and the real life markets where people want to live in a house won't be, I don't want to use the word corrupted, but they won't be kind of tainted with the amount of big money that comes in and pushes young people out of the possibility of owning a home.
Right. So that again underscores how different, it's almost a disruptive transition that we're looking at, right? Now, disruption, transition, how do we then read Elon Musk and how he plays into his tweets? And, he makes a tweet and Bitcoin goes up 10%, down 10%, right? He complains about the energy use and Bitcoin crashes. I'm trying to make sense of that. Can you make sense of that?
I'm glad you raised him, because in the crypto community, we're a tight community. We certainly have our differences, and that's because there are different coins out there and different opinions, but we don't appreciate someone coming in and using their words to really mess with people's lives. Now, it's one thing to release a tweet and say, oh, I didn't realize it would have that effect. But when you continually do it and you're really hurting, because for many people, crypto, the beauty about investing in crypto is it's completely open to everyone. So if I want to get into the real estate market, I need a big deposit and a big cash flow to be able to service that debt. And if I don't want to have a debt, I need a huge amount of money to buy a piece of property. If I want to get into the share market, I typically need a $500 minimum buy-in with some fees to go in and out. And to the average person, $500 of expendable cash is a fair bit of money. But if we look at crypto, you can put 1 cent into crypto, and with just a mere cent, you can now be an investor. You can be in an investing space where you are actually getting some type of return, some type of growth, or some type of skin in the game of an investment space. When Elon Musk comes in, what really confuses us in the crypto community is that we have huge announcements, such as governments saying that we've put a bill forward to adopt Bitcoin as our global currency. We have PayPal, MasterCard, and Visa saying we are incorporating crypto into our payment systems. We have huge companies such as MicroStrategy with Michael Saylor putting in recently, I think he's written a $400 million worth to put into Bitcoin. And what does that do to the market? Virtually nothing. Yet we have as we sometimes jokingly call him, a little rocket man, make a tweet on crypto, and it can crash the market. Now, on one hand, you could say, if you're not into the crypto space, this is how volatile the market is. And in many senses, that is completely true. But it also, I would actually take it a step further and say, this is how much people still don't get crypto. They still don't get that the reality is that when a government says we are going to adopt this currency as our payment system, or a multi-billion-dollar company says we're going to incorporate this into our business, and it doesn't do much. Yet you have someone like Musk tweet something like just one word, and it can drive a market up or down. We've respectfully asked Elon Musk to step aside. Unless you are part of this and you want to help people, stop messing with people's investments and stop doing this to be a troll. Sure, there is freedom of speech and everyone should have the right to say whatever they like, really. But when you're in a position of great influence, great power, and you claim to be wanting to do things for the world, such as create EVs, electric vehicles, which is apparently they say are going to be better than fossil fuel vehicles, but they never talk about the damage to the earth when they pull these raw materials out of the ground to make the batteries, or how we're actually charging these batteries. It becomes a little bit hypocritical. And I'd also like to touch on the hypocrisy that we perceive with Elon Musk talking about his concern about Bitcoin being very energy hungry. So first of all, more than 2/3 of Bitcoin's network is powered by renewable energies. essentially free energy. So if you look at huge mining farms in China as an example, there are massive amounts of excess energy. Yes, excess energy from dams as an example, where there's nowhere to push this energy. So we can pick up Bitcoin mining farms and we can move them near these power sources. Now, you can't do that with a bank. I can't go into the center of Sydney, pick up the Commonwealth Bank and say, hey, Commonwealth Bank, because your building uses a lot of energy, I'm going to pick you up and I'm going to put you in the middle of the desert next to this solar farm, or I'm going to pick you up and drop you next to this massive river in China because that's where all the electricity is. Bitcoin's energy consumption is completely mobile. That is, you can go to where it is free or in excess. Now, with Elon Musk, when he was talking about Dogecoin and Bitcoin, the hypocrisy, in our opinion, is that on one hand, he says Bitcoin is using lots of energy, so Bitcoin bad. But on the other hand, he says Dogecoin, not verbatim, but essentially Dogecoin good, Bitcoin bad. But both those coins are proof of work coins. So not to get too much into the technicals, but there are primarily, there are new variations coming out, but there are primarily two types of coins. One that is proof of work and one that is proof of stake. Proof of work is something like Bitcoin, Ethereum currently, not Ethereum 2.0, but Ethereum currently, and Dogecoin that use massive amounts of energy to secure the network. The advantage of proof of work in its pure essence, if we look at Bitcoin as an example, is its security, its value in the coins that it produces, because we've spent a lot of money making these coins, and its decentralized nature. In broad terms, when we look at proof of stake, yes, far more energy efficient, absolutely, but by definition, more centralized in the way that they're controlled. Now, which one's better? It depends what you're using it for. If you wanted to use Bitcoin as a digital gold and a store of value, you want something such as Bitcoin that is very secure, very decentralized, and immutable and open sourced. If you want a global payment system where you can move huge amounts of money or even microtransactions, very tiny amounts of money, very quickly for almost free, then a proof of stake system becomes more efficient. As I mentioned, the irony of old Muskie saying that Bitcoin bad, Dogecoin good, well, both of them are proof of work. Both of them use lots of energy. The concern with Dogecoin, of course, is that Dogecoin has an unlimited supply at the moment, whereas Bitcoin has a fixed supply.
Right. And I'll tell you, I'm letting you a little secret. I've made a few comments about Dogecoin, Doggycoin, Dodgy Coin, as I sometimes call them. Right?
Yeah. Australians get that.
And people take me seriously, and I'm like, no, I'm just playing with you, right? But it is interesting, right? That those two similar yet different, right? And one of them is, as you say, limited. The other's unlimited. That's a fundamental difference. Now, one of the interesting questions that came up here, and it's a sort of nice segue, was Elon caused 1 trillion turnover. I suspect the small guys lost in crypto versus the whale bots who took advantage. Probably billions of small guys gave the whales a huge amount. Now, I want to talk about whales, right? Because it's really important people understand how this works. This is a critical part of the way that this system works, right? Whales are big holders of coin, and some of them are actually pretty automated, aren't they?
Yes, that's right. And what we can actually see, so a while ago you mentioned about the concern of a black market, if you will, people moving money around the world as a bad currency. Now, of course, the number one currency used by criminals around the world is the US dollar. And the US dollar is completely untraceable in the sense that if I've got a bag of cash and I take it somewhere, well, you can't trace it. But if I am using the SHA-256 algorithm, which is what Bitcoin is operating on, and I'm moving money around the world, you can trace this movement. You can see where these coins are going. Initially, you may not be able to see exactly where that person is, but you can see the movement of money around the world. But sorry, my dog. Apologies, Martin.
No problems at all. Got to get these things sorted out. And I will just, at this point, just go here, right? So I did say I'd show you my setup, right? This is actually my setup, right? So screen 1, screen 2, screen 3, keyboard and all the controls, right? So that's how I do my live streams, right? That's why I think actually having multiple screens makes a lot of sense, because I've got over here, I've got the the investing data sets that I show. In the middle screen, I've got the chat, and over here I'm watching you. So that's the way I'm doing it. Okay.
You look like you're in a spaceship. That's
yeah,
impressive.
well, some people call it the Star Trek Enterprise, right? The bridge, right? But
going back to your sorry,
Cool.
back to your before. Dino was spooked. I've got a thunderstorm happening in Canberra, so poor old Dino's freaking out.
Yeah,
so to answer the question, a very good question from the viewer about whales. So whales have more power when there is a smaller market. So it goes back to what I was saying about if I put $1 million into the derivatives market, it will do absolutely nothing. But if I put $1 million into a market that's only got a market cap of $1 million, I essentially double that market. What we can see with the recent pullback over the last few months is that, again, because you can see the wallets, you can see where the money is moving. It is completely open and transparent. You can see that, in fact, crypto investors who got into the space over the last 6 to 12 months, they were the ones, the majority, who sold when the market pulled back. So they were new to the market, they got spooked, they had no experience, they weren't familiar with the volatility of these crypto markets, and as soon as it pulled back, they panic sold. But the data shows, not through opinion, but through completely transparent wallet addresses, that you can see that those who have been in this space prior to 12 months ago, they were not spooked. They did not sell. And what in fact is happening is that we can see that huge amounts of Bitcoin is being scooped up by the whales, by those who were spooked out of the markets. So the newbie comes in, they buy some Bitcoin, they see the market drop, and instead of, as I talk about in my book, predetermining an exit point before you get into your trade or investment, they just thought, oh, well, if I don't sell now, I'm going to lose all my money. Those people sell, whales come in, and not even whales. I myself, when I see, I'm not a whale, I wish I had that much money, but when I see these markets pull back, I just scoop up cheap Bitcoin. I'm scooping up more cheap Bitcoin. Now, you might say, well, when's the exact bottom? No one knows when the exact bottom is, and no one knows when the exact top is, except the Simpsons gave a prediction that the exact top was infinity. They showed a little stream.
Well, they must be right. If it's on the symptoms, then that's
it is, because they predicted Trump, and we have we look at, there was some type of statistical analysis of the odds of the Simpsons determining, because they did it years ago. They looked into the future and they said Donald Trump would be president, and he became president. And so when the Simpsons released that that Bitcoin's top was infinity, there's actually a lot of truth in that, in the sense that how do we determine a top for Bitcoin when there is a very scarce resource or asset and so many people are coming into it? How do we determine a top? But when we go back to that whale question, the reality is the bigger the market, the more difficult it will be for these whales to manipulate it. And we are under the impression that in many ways that this move is a last-ditch effort to push out all the chumps so the whales can scoop up as much Bitcoin as possible. But for those who are in the system who buy Bitcoin, you don't have to sell it. And my only real advice to anyone who's investing in anything is that losses aren't realized until you press that sell button. If you don't press sell, you haven't actually lost anything. And if you've gone into this space predetermining your exit point in the future, it doesn't really matter what the pullback is now. And of course, the other thing that I really encourage, not giving financial advice, to get into any investment is dollar cost averaging is your safest bet. If you're putting $10 into this market, had you been putting $10 into this market over the last 9 years, you would have earned about $1.6 million off a $4,900 investment. That's $1.6 million off a $5,000 investment. Now, again, that's not putting all your money in at once. That's $10 a week for 9 years.
Yep, absolutely. Just a quick segue. Somebody asked this question: what's the monitor on the top, right? And the answer is, yeah. So that one here is actually a dual monitor. I've got here the audio, so I'm seeing the level of audio that I'm saying, and when Adam speaks, what he's saying. So that's how I control the levels to make sure they're right. And next to it, if I move the light out of the way, there's also a levels that actually looks at the levels on the video as well. So that's my monitoring. So if I can see the audio flickering and I can see the levels working, I know that the studio is working correctly. So that's the easiest way to control what I do. So that's what I've got there, just to answer that particular question.
I'm glad Blue Bum asked that, because I was wondering that as well. It looked like some type of radar system.
Well, it is a bit radarish, but I found it really hard previously to check the levels because there was no obvious place to look without sort of looking around, or now it's right in the line of sight. So that's why I do what I do. Sorry. And I should just explain to people, this has evolved over nearly 12 years. So it's not like I've suddenly gone out on day one and bought all the gear, right? Never do that. If you're going to launch a YouTube channel, start with just one camera and a good microphone, and then build out it, right? Because then you'll learn what you need. But I have to say, a lot of people keep contacting me and say, tell me about what you got here, and and then they sort of rush out and want to try and emulate it. No, that's the wrong way around.
Absolutely. We were talking off camera before how too many people go out and they just say, I'm going to be a good YouTuber, so they spend thousands of dollars on this setup, when all they really needed was a good microphone and a reasonable camera.
Yeah.
But I think we both agree audio is everything. This is my 7th microphone, and I think I finally got a good one by Rode. But audio is absolutely everything. And when I was doing a live show or a joint show with Bo Stoner from Cryptocurrency Australia several years ago, the thing that used to kill us the most was the audio. We would spend hours trying to get the audio just right. And of course, one little tweak could throw everything way out of whack. So I guess my next investment will be one of those little audio monitors that you've got. If anything, it looks like a spaceship.
Yeah, well, it's pretty good. And I will just make the point that there is a clown pretending to be me on the channel. I've just deleted it and deleted that clown. So it's one of those things I put up with. So people basically pretend to be me, but they spell what the word slightly weirdly or umlaut over one of the letters and things, right? And then they nick my photo from the channel. So I spend a lot of time whack-a-moling them. But
do you get many of them? I'm getting at least one new Adam Stokes, Adam Stokes, Adams Stokes, Adam Stocks.
It's
every day.
It's extremely frustrating, and unfortunately, YouTube seems incapable of dealing with it automatically. So, anyway, just a little bit of a warning there. And basically, if anybody sees any WhatsApp numbers or any specific links to trading platforms and things in the chat, it's not me. I never ever do that. So it's a scam. It's a pirate. Just something to pretend to me, just ignore it, or better still, report it to YouTube, because the more they get reported, the more likely they are they'll disappear. Sorry, got it off my chest. Okay.
No, I'm with you, mate. It's brutal in the crypto space as well, because the number one problem for crypto YouTubers out there, and this actually, I'm glad you raised this, because what's happening, most people who get burnt in crypto is that they're burnt by scammers, and they think crypto is the scam, where crypto isn't the scam. Scammers are the scam. And we can see, it's like saying that email that comes out that the Nigerian prince who has hundreds of millions of dollars, if you help him out, he'll send you hundreds of millions of dollars. Now, of course, it's a scam, but that's not to say email's a scam. That's to say that was used as a platform, as a tool to scam the scamee. And what we're seeing in the crypto space is, I was actually contacted by a friend from high school, and she said, Adam, I put hundreds of thousands of dollars into Bitcoin and I can't get it out anymore. And I said, can you send me a link to, how you bought this? Where did you buy it? And she sent me the link, and she had been scammed. She had put all of her money into a scam site. And I might just actually plug, if I can at the moment, the crypto.land is a site that I built, www.thecrypto.land. The crypto.land was built primarily as a tool for everyone who's new in the crypto space or experienced in the crypto space to go to one safe and secure landing page where they can do anything crypto. Now, of course, I'm plugging my product here, but the reality is I was sick and tired of good people being ripped off by going to shadow sites or scam sites. So if you are new in this space and you want to put in $1 or 10 cents and you're not sure where to go, the crypto.land is a safe and secure landing page for anything crypto.
And I think it's really important because the ACCC just published their latest scam results for last year, and I'll make a show later, but what they highlighted the increase in the number of crypto-related scams, right? It's not the cryptos themselves that are a scam, but it's basically the people who are pretending to be brokers and intermediaries, right? And like we said earlier on, somebody came out and said, here's a WhatsApp, right? and you then get sucked in, and then basically they'll just take your money, right? Unfortunately, that is big business, and unfortunately, it's not helping to make the discussion of crypto clear and clean, because of course the scams get then rolled into it's cryptos that's the problem. Well, it might be, but more likely it's human nature, greed, trying to actually exploit it.
It was also compounded. So Google, for a long time, this was absolutely tragic. So in 2016-17, you had the big run-up, and the big money in crypto was ICOs, initial coin offerings. And what was happening was lots of scams were coming out there, as we see now. So Google put a blanket ban on all crypto advertising. Now, this is what actually happened. All the legitimate sites, all the real sites that were doing the right thing by everyone in the crypto community, they could no longer advertise on anything to do with Google. So they couldn't do it on Google Ads, YouTube. It was a blanket ban. What did this do? What it actually enabled to happen was it enabled scam sites to go and launch their product. Now, how did they get to advertise their scam cryptos? Well, it's essentially when you launch a Google ad, this is what was happening. You could launch a Google ad or a YouTube video, and you could get through the system for 1 or 2 days. And that was a scam site that could get through the system for 1 or 2 days, even sometimes up to a month, where it was a scam site that could be advertised on Google. Meanwhile, the actual legitimate sites that were trying to spread their brand legitimately to the good people out there, they were banned. So the irony of doing a ban, and it's a good example of when big government, and I'm talking about Google being big government in this instance, they came in and said, right, we are going to ban all crypto advertising. That put all the good crypto people, the legitimate crypto people, into a box where no one could see them. And it allowed this flood of scams to come in. So when newbies came into the space and they looked, how do I buy Bitcoin? Search. The only ones that would come up primarily were the scam sites that were going through. Now, they go through for 3 days. Google would catch onto it and cut them off. And then the scam site would just repackage it and launch it again, repackage it and launch it again. And in fact, they became so efficient at it, Martin, that they didn't even need people to repackage it and launch it. They could just get bots to do it. And that, luckily, crypto is now able to be advertised on Google and YouTube. And as a result, you're going to see more legitimate sites bubbling to the surface instead of being silenced.
Absolutely. Yeah. This is unfortunately the way of the world, right? And, I always say to people, wherever you get your information and whatever you do, whether it's buying a house, whether it's actually trading crypto, right? Just don't suspend disbelief, right? Be skeptical, right? Because there are people out there who are very happy to, whip money away from you and scam you. And unfortunately, with the digital world that we're in, it's a lot easier than it used to be. And that's one of the things that the ACCC said. The total volume of scams have gone up dramatically over the last year, and not all of it's online. Some of it's also phone scams and those sorts of things, but a lot of it is actually because of the online stuff. So worth just putting that warning out, I think, for people. And I have removed the offending article who was putting up. And by the way, I am not on Facebook. I'm not on WhatsApp at all. And the reason is that I actually disagree with Facebook's privacy policies. So that's why I have nothing to do with Facebook or any of its suite of apps, just so people are clear. Okay, let me go on to this then. Bank of England, discussion paper on new forms of digital money, and they summarised effectively the responses to the 2020 discussion paper on central bank digital currency. In fact, they put out quite recently an interesting paper on the whole issue of central bank digital currencies, right? And there were a few things that they said, which is really interesting. The first thing they said was there is a very strong and emerging case for a central bank digital currency, but they're not sure the shape of it, right? But they want it to have a one-to-one correlation with underlying value, which suggests stable coin rather than not stable coin. They're also talking about the need to ensure that there is some appropriate trust, regulation, control, right? Now, this echoes, of course, what's happened with the Fed. They're running trials in the US with FedCoin. In Australia, the Reserve Bank here is doing a test with effectively a commercial, effectively central bank digital currency for commercial purposes rather than for retail purposes. And there are other experiments around the world. It seems to me that central banks are beginning to actually test some of the bounds here. But there's a fundamental difference between crypto, as we've been talking about, and what central bank digital currencies are on about, which is effectively maintaining control, maintaining auditability, maintaining things like money laundering and all those sorts of things. In other words, what they're trying to do is read across from the old world to the new world and create a central bank digital currency option, right, which is like the old world. And they're also saying, well, anyway, most digital payments are already digital, so we're already in the digital world. It's not like we're not there now. So there's a fundamental division, right, between the central bank defined future and the decentralized, crypto land that we've been talking about. And I'd also make the point that this centralized control could allow then effectively the removal of cash from the system, could allow greater control of the monetary flows. And if you then overlay that with things like social scores and all those things, you can start seeing a very strong control argument coming off the back of it. And China, of course, is a long way down the track already with what it's doing. So what's your read on this tension between the central bank digital currency and the devolved, decentralized, cryptos that we've been talking about?
Yeah, great question. And I could speak about this for hours, but it comes down to this. For many years, banks and governments have taken for granted the ability to create money out of thin air. They've also taken for granted the ability to legislate, you will use this money or you will be in trouble, or you'll accept this money or you'll be in trouble. And that's what we call legal tender. The reality is, I'll answer this in several parts. First of all, there is no doubt whatsoever that the cryptocurrency payment network is a far superior payment system for moving money from point A to point B. Now, point A could be right here and point B could be anywhere on the planet with some type of digital connection. We are already using digital money. So in the first instance, there is no doubt whatsoever. And if anyone doubts the power of cryptocurrency, why on earth are countries submitting bills to use Bitcoin as their currency? And why is the Bank of England, such a powerful financial institution, saying, well, how do we explore these cryptocurrencies? The reason is because this technology is very real. It's here to stay, and it's not going anywhere except up and into society. The second part of that, Martin, is what do you do when you're a bank or a government that had the ability to print money out of thin air and deem it have value? What do you do when that has gone, when that has disappeared? What you actually find is now that countries, banks, corporations that have this ability to either do fractional reserve lending or quantitative easing, essentially money printing, they now have to produce real value. They have to produce value just as everyone else has to produce value who wants Bitcoin. I can't just print Bitcoin. I have to either mine it using a lot of value through electricity or mining farms of renewable energy. I have to somehow create some type of value to produce or own that money. So now governments, they're not just reconsidering, can we use this payment system or that payment system? They have to really question themselves and say, how are we going to make money? In the past, we used to just be able to print it and call this natural rate of inflation something that was good. They said inflation was good because it encouraged spending. Well, it also encourages a lot of waste, unforeseeable amounts of waste, because if you don't get rid of your money today, it's going to be worth less tomorrow. And of course, that encourages a lot of consumption. And that consumption is bad for the environment, whether we're just buying lots of crap to put in landfill or we're just keeping these systems in place where we just keep using their money. So going back to the Bank of England, in the first instance, they recognize the power of crypto payments, the digital payment system around the world. But in the second instance, we're going to see a very difficult situation where governments are going to have to try and outlaw Bitcoin. They're going to have to say, no, we don't want you using your money. We demand that you use our money. But people have had enough of fiat. Now, whether it's digital fiat or physical fiat, fiat systems are a fraud in the sense that even by their definition, they have value by decree. We say this money has money because we have money. Well, that always fails. Every fiat system in the history of humanity has always failed. And the arrogance for any modern person to say, well, no, this fiat system that we're using now, i.e. the USD, that one's going to work. We know it's not working. It's not working because we've lost the M1 and M2 money supplies that not even the United States know how much money that they've got anymore. And concurrently, the freedom of the market is saying, I don't want that money that's worth nothing. I want that money that's scarce and has value. So the real question as a society, I think we have to ask is, what is freedom? We've got freedom of speech, freedom of expression, freedom of association. And the cheap approach to saying, well, no, you have to use this money because money laundering and criminals and terrorists. Well, terrorists drive Toyota Hiluxes. Terrorists use shoes. Drug dealers go to the shop and eat bread. So we don't just cut off all those systems so terrorism and drug dealers and bad people don't have these systems. We actually have to introduce policing to stop this thing happening. And the excuse to say, well, you can't use that money because bad people is a very cheap cop-out, and it doesn't resolve the problem of fiat. Fiat is not linked to anything. And although there's an argument that Bitcoin is not linked to anything, it is linked to scarcity. It is linked to inherent value through the amount of energy that's put into it, and it is linked to the value that the people put into it. How much is Bitcoin going to be worth in the future? It's going to be worth 1 Bitcoin. And if we look at what El Salvador is doing, one argument was, how are they going to price bread if a Bitcoin is worth 60,000 US dollars today and 30,000 US dollars tomorrow? Well, don't link it to the US dollar. I've actually argued many times that in the future, we will not be reading the value of Bitcoin linked to the US dollar. Why? Because the US dollar, well, what's the value of the US dollar? What's the US dollar linked to? It's linked to nothing. And it's just constantly printed. So how much is a dollar worth? What we'll see in the future, this is the world according to Adam Stokes, is that we'll be measuring Bitcoin in ounces of gold. So here's an ounce of silver right here, and I keep this as a lucky coin. I just like playing with it. In the future, I will see Bitcoin linked to, this is how many Satoshis. A Satoshi is a Bitcoin cent. There's 100 million Satoshis in a Bitcoin. So going to the El Salvador example, what they will do is I'll say that loaf of bread is 10,000 Satoshis. That might sound a lot, but remember, there's 100 million Satoshis in a Bitcoin. Or they might say that loaf of bread is 100 Satoshis, and that's it. So the future of money, everything that we know about money with fiat is turning on its head, and you're going to see this exponential turning point where you'll see El Salvador, Puerto Rico, Panama. You've got there was another country, I think Uruguay. I think all these countries coming into it, and you'll see this very quick shift into this money. The US dollar is dead. The US dollar is completely dead, and if you doubt that, just go to the analogy. If I said you can either have $10,000 worth of Bitcoin or $10,000 worth of gold or $10,000 worth of Bitcoin, but the catch is you're not allowed to spend it for 10 years, which one would you take? And when we look at gold, certainly we can see gold has a value, but if you look at the purchasing power of gold throughout its history, an ounce of gold has more or less held its purchasing power throughout time. And if people are getting into money for the first time, and when I say getting into money, is that, sure, we've always used money, but there's been a very poor understanding of what money is. Really always look at the purchasing power. The reality is that Bitcoin can buy way more now than what it could last year, and way more than what it could 10 years ago. Whereas the US dollar can buy far less now than what it could a long time ago. And here's the irony, Martin, is that we are better at technology. It is easier to produce many things that we make now, but it costs us more money to do so. And that's because of the devaluation and the invisible tax of inflation.
Mm. And look, you've made a really, really important point, which is, what is the value hook, right? What is that linchpin of which everything else is actually measured from, right? Because if you use the US dollar as the hook, then you get one set of effects. If you use gold, you get another set of effects. If you use crypto, you get another set of effects, right? It shows you that actually there's a relativity to all of this that a lot of people will find quite scary.
Absolutely. And it's just because for our entire life, well, certainly my entire life, I was born way after 1971. The USD was always a global reserve. It was and still is the global currency, the financial reserve for everyone that was pinned to it, because that's all we've known.
Yep.
But again, it gets to that tipping point, and the reality is that no fiat in the history of humanity has ever survived. All fiats collapse, and the US dollar is about to collapse. Now, some people say I'm being a bit melodramatic here, but I know where I'm putting my money. Why would I want a currency that is unlimited when I have alternatives? Before I didn't, but now I do. And the other thing to consider is, of course, with gold, and this is the argument that, I'd love to speak to Peter Schiff one day. You've interviewed Peter Schiff, but
yep.
I can't take this silver or gold and buy something on Amazon. I need a digital money. I can't even physical. I can't go down to Woolies and say, give me that loaf of bread. Here's $30 worth of silver. They're not going to accept it. They have to weigh it. They have to confirm its purity. You can't do that. So you need some type of money that is fungible, something that we can move around the world. And the only money that we use that's fungible is digital money. And then you have the question, do you want to use digital fiat, which is unlimited and worth nothing? Or do you want to use a digital crypto that is finite and highly valuable?
I'm conscious of the Jackson Hole speech that the ex-chair of the Bank of England gave in the US a couple of years ago, because he had basically argued that there will be a point when the US dollar ceases to be that anchor point, right? And then the question was, what will the next one be? Is it going to be the yuan? Is it going to be gold? Is it going to be something else? And he was arguing, well, maybe it should be a stable basket of currencies, a stable coin, effectively, right? And so his view was that could be one potential future. So it is interesting that even in central bank land, there is some thinking about the status quo may not actually always be where we currently are. So that's what we're thinking about.
Well, I'm glad you raised that point, because the question is, will you, the good people of the world, accept another fiat currency? Will you trust another fiat currency? Would you trust, when the US dollar collapses, not if, but when it collapses, would you suddenly trust the Australian dollar as a global currency? Would you suddenly trust the Chinese yuan as a global currency? Or would you trust something as finite as Bitcoin that everyone can see, no one can control, everyone can access? Now, I even say, I go to the point of gold. So I think there's about 2 Olympic pools worth of, I think it's 2 or 4, one of those 2 numbers of Olympic-sized pools of gold that we've pulled out of the ground. And there's a good analogy that someone said, or a example that someone said, aliens would think that we're crazy if aliens were looking down at the Earth and they could see the amount of money and energy that we put into pulling gold out of the ground to lock it into a vault. They would think that we're crazy. But even if you look at the gold supply now and you say, well, gold is finite. Well, is it? How much gold is there? You don't know. I don't know. No one knows. We could, some talk about meteors or asteroids. I think that's a bit too expensive, maybe in 1,000 years. But there's so much of the ocean's surface that we haven't explored. There's even arguments, perhaps a conspiracy theory or perhaps a reality. We don't know. Maybe there's 2 more Olympic-sized pools of gold at the bottom of the Grand Canyon or somewhere in the desert. We don't know. My point is, we do know how much Bitcoin there is. We don't know how much gold there is, but we also know that when it comes to fiat, whoever it is, Australia's, China's, Australia's, the United Nations, the European Union, it is unlimited. And would the world ever trust another fiat? I certainly wouldn't, particularly as I have another option.
Yeah, and that's the point, isn't it? The fiat approach, and the creation of money out of thin air, the creation of credit. As people will understand, I often preach this point that credit creates money, right? It's not from deposits to credit; it's from credit to deposits, and that's unlimited, right?
Absolutely.
Yeah.
And it's this invisible tax. People are waking up. My mission on my channel is to really try and get people out of poverty. I came from a very poor upbringing. I had food, but, I can remember at university, I had $3 a day to live. And I remember getting rice from a shop on campus, and sometimes they'd pour sauce on it, as in I could get the rice, but I couldn't afford the meat. But sometimes they'd pour the sauce on the rice for me. And if I was lucky, a little tiny bit of meat got into that rice. And I hated being poor. And the reality is, as I see, the harder people are working, wages aren't going up, but houses are. Why is that? Houses aren't worth more. It's just that your money is worth less. And you can see the gap as so-called assets such as the housing market is constantly going up whilst wages aren't meeting that. So on one hand, you would say that with real inflation is that your wages would go up to meet the cost of houses and electricity and water and energy. But it's not. The gap is getting bigger. The gap is getting bigger as big assets are becoming more expensive, energy is becoming more expensive, and real wages are not keeping up with that. People are being robbed blind with the invisible and brutal tax that is inflation, and Bitcoin is the cure to all of it. Those who get it understand it and grasp it. And ironically, those who also get it in power are going to do everything in their control, in their reach to stop it, because they understand how powerful and truly wonderful this technology is.
And that sort of visionary stuff, I think, is worth thinking about rather than just thinking about the speculative movement of Bitcoin in the last 3 months, right?
Yeah, let me ask you, if I may. So if you were a central government and you had this ability to print money, but now there's an alternative to Bitcoin, and let's say you're the chair of the Bank of England, and I said, Martin, okay, in the first instance, we've got to get digital money because it's a far superior payment system to move money around the world. Check, we got that. But now, Martin, I need you to somehow make it so that we can still do what we've done for the last 100 years and print money to infinity whilst banning Bitcoin. How would you do it?
Well, yeah, no, you're right. It would be rather difficult to do. And look, the fact of the matter is that central banks around the world are on the same trip, which is creating more and more and more of this stuff, right? And we're seeing that in terms of asset inflation and all those things. And everybody's conscious of all of those things that are going on at the moment. They haven't solved the fundamental issues in the economy since the global financial crisis, or indeed before, right? And they're just doing more of the same. So that's where, that there's a convergence here. Well, people call this perhaps the Great Reset, or, we need a revolution, we need a different way of thinking about the problem, right? Now, whether the way of thinking about the problem is a digital alternative, right? And whether that's the right way to go. I'm very nervous about central bank digital currencies coming in and effectively they just come in over the top and ban the cryptos and everything else and say central bank digital currencies are now coming in as of from next week, and they'll just do the same again and be digitally enabled, right? Because there's no fundamental discipline in terms of managing the public finances, right? That's the problem we've got. And there's a political imperative, which is effectively just to keep the wheels turning rather than actually doing some of the real critical things that we should be doing. We're not putting money in the right future funds for the future investments, for the future of our economy, or children and children's children. This is nuts. What's going on is nuts at the moment. And the question is the crypto alternative, right, a conceivably more feasible next step? And the answer is, you could see how it could be. There'd have to see big changes and big adoption questions. But that's why I've always said to people, I'm not completely anti crypto at all, right? I want to understand it and I want to see how it works. But what I do think is it offers potential if we thought about how we could actually take it and take us to somewhere different, because we have to change the rules of the finance system because the current rules are broken. Few at the top doing really, really well, the rest not. The latest ATO data that came out this week showed a huge proliferation of, multimillionaires at the top, not so everybody else. This is not an equitable, fair system that we have in Australia or around the world at the moment. Maybe the next iteration of what we need should actually be based on a different set of DNA, and maybe that DNA is crypto in some way.
Well, I would actually argue, first of all, why does there only have to be one money? So one argument I get is like, Bitcoin is slow, or Bitcoin uses a lot of energy. And I'm like, okay, well, comparative to some other cryptocurrencies, yes, it is slower. And yes, it does have a high energy consumption. But gold is slow, and gold uses a lot of energy, as in you use unforeseeable amounts of energy to smelt a gold and get gold out of the ground in the first place. Does that mean it doesn't have value? No. And does it mean that we don't have other currencies? Not at all. So my vision is in the true spirit of democracy, Money was never meant to be a function of the government. Money is a language by the people, for the people, determined value by the free market. If you're looking for truth, the truth is in the markets. How much is a Bitcoin worth? A Bitcoin is worth whatever the market says it's worth. How much is a dollar worth? Well, apparently a dollar used to be worth whatever the government said it was worth, but it's not, because the government can no longer control how much a dollar is worth, because they have lost control of it, because it's fiat. They can't control something that's unlimited. Therefore, I would say, how about government step back? I'm not talking about letting go of tax. I'm not talking about letting go of financial regulation. But I am saying, how about the government steps back, global governments, I'm not just talking about my government, and say, allow the function of money to be a function of the people, by the people, for the people. And that may be a cliche saying, but how many currencies do we need? Well, as many as the people want. How much is money worth? Well, whatever the market says it's worth. That doesn't change the percentage of tax, of GST. That doesn't change the percentage of what a government can, get their claws into a certain amount of money or values or payment systems. But we see that whenever they create a fiat, it just collapses themselves. So if they could get back to the fundamentals of what governments are supposed to do, as opposed to going down this path where they are in a very difficult situation. And I'm glad you mentioned the Great Reset, because the Great Reset will occur whether we like it or not. There's two sides of the Great Reset, and I think it was our interview last time or the time before where you said, what's your take on the Great Reset? And I stand by what I was saying back then. Was, on one hand, it's a natural event that has to happen. Why? Because fiat will collapse. That's when the Great Reset will happen, when fiat collapses. So governments are saying, well, okay, how about we, or whoever it is, it may not be governments, it could be some people at the top that we don't even know about, that are saying, well, how about we take control of that Great Reset? What I say is, let the markets decide. Let the free market, let the people decide, hey, I'll use that money for this, I'll use that money for that, and I'll use that money for this. And that may sound confusing to some people initially, but we already do it. We already do it with bus passes, movie tickets, frequent flyer points, dollars, euros. We actually use many different types of currencies around the world. Mate, even in Australia, we have the beer currency of, hey, come mow my lawn and I'll give you a case of beer. It might be a bit expensive, or it depends how big your lawn is. But again, if the argument is constantly, I need to get my tax, and bad people use Bitcoin, so we're going to stop it, you're going to destroy economies. And we can see that with countries such as Venezuela, Greece. They were all on my top of my head. I had a big list in my head. But these countries that are dealing with hyperinflation, that collapses these nations because they just keep trying to print all this money, and it never works.
No, it's very interesting. And, the truth is, what we currently have isn't fit for purpose. So therefore, thinking about alternatives, I think, makes a lot of sense. Now, there's just a couple of questions I wanted to pick up. The first one was, what did Adam say was a good site to buy crypto? So I think you want to just give another plug for your site. You were a bit quick with it, so people didn't pick it up.
Thank you for asking. It's called thecrypto.land. So www.thecrypto.land. Now, I've built that site, and I give you, the customer, the market, a choice of which sites to use. They are the only sites that I use and I trust. So I'm not saying you have to buy from. When you go to the crypto land, you'll see that there's multiple boxes that you can choose from. So anything you want to do crypto safely, the crypto.land, it's all there. And I sort of put my hand on my heart that every link on that site, everything on that site is legitimate, is not a scam.
Great. Okay. Well, I'll also make sure that link is in the comments below for those watching the replay. The other question that came up was about XRP, right? Because XRP is actually a fundamental platform for a lot of the things that are currently being tested by a number of central banks. So can you just do a bit of riff on XRP?
Yeah, so XRP creates a bit of division in the crypto community. XRP is a very good product. It is an incredible payment system that does work. It is a superior payment system that can move vast amounts of money around the world very quickly. The real question about XRP, and I've done a bit of a deep dive into this coin. So the division within the crypto community primarily is with XRP is that Bitcoin enables you, the person, to be a bank, whilst XRP empowers the banks. That is, XRP creates a financial payment system primarily for banks. Now, that's not to say that I can't send you XRP directly and quickly and cheaply, but the real question is, first of all, will we have banks in the future? And if we have banks in the future, then XRP will be very powerful for the banks. But then the second part to that question is, will banks want to use XRP or will they want to use their own? Now, some people say the banks, there's no way anyone could ever make a coin as superior as XRP. I say XRP is good, but it's a computer program. And if you think banks that have more money than countries won't have the resources to build something as powerful as XRP or leverage off another coin, I think you should probably check the power of the banks and the ability that they have. So XRP, I've spoken to many people in my crypto community about it. I do own XRP. I don't buy any more. And the other thing with XRP is it's got a massive supply, which isn't a bad thing. It's going to be used if it's adopted. If it is adopted as the global payment system for banks, it will essentially wipe out the SWIFT network and remittance platforms, arguably, and move vast amounts of money around the world very quickly. Will it be adopted? Who knows?
Okay. Well, we've pretty much run out of time, Adam. I mean, very interesting conversation. We've gone a lot of different routes, but I guess the takes that I have are these, right? Crypto is multifaceted, multi-headed. It's quite complex, right? But nevertheless, it's something which people should take time to try and understand and get their heads around a little bit, right? Don't be put off by all of the cries of scams and things, because there are scams, but it's not fundamentally what we're on about here. And don't just assume that crypto equals Bitcoin equals volatility equals silly movements in the market, right? There's a lot more going on here than that.
Absolutely. And the other thing is it's so inclusive. One of the pushbacks I get is that there's a belief that you have to put all your money into crypto. Of course not. I don't put all my money into real estate. I don't put all my money into gold. But the reality is, when I put money into real estate, I have to put a big chunk into it. When I put money into shares, I'm doing that $500 minimum. But when I come into crypto, I can put 5 cents into it. So not that I'm giving financial advice, but if you are curious and you have a spare 1 cent or 5 cents, chuck it in, have a go. And then you're part of it. And if it crashes, you've lost 5 cents or 1 cent. But if it performs even half as well as what it has done over the last 10 years, you're going to double your money every year on average, if it performs half as well as what it has done for the last 10 years. Now, that's for Bitcoin, noting, as you mentioned before, there's over 5,000 cryptocurrencies out there. Some will do 1,000x, some will do 10,000x, and many of them will collapse and crash entirely.
And that's the point, right? So, folks, they could go to zero, right? And that's something just to bear in mind. Some of them could go to zero. The difficulty is you don't quite know which ones. So again, caution is, I think, also quite important.
Yep, but there's one thing I can guarantee also. Fiat will go to zero.
You heard it here first, folks. Adam, I really appreciate your conversation tonight. Thank you so much for taking the time to come on the channel. We'll put all the links and things below. Really appreciate it. Any last thoughts before I let you go? No,
just I'm very impressed with, first of all, your commitment to expanding the knowledge, not just for yourself, but for all your viewers in this space. And it's good timing. Dino is jumping up on me at the moment, and I really appreciate the chance to work with you. For those of you who haven't met me, come over and learn more about crypto at Adam Stokes on YouTube.
Terrific. Thanks very much. Have a great evening, and you have permission to go pat the dog. See you later.
Thank you, Martin. Ciao.
Cheers. Well, there we are, folks. That's an interesting conversation tonight. Thank you to Adam. Great chat there. Just in terms of, as I close the show, next week there will be a chance to discuss with Edwin directly live some of the property truths that we've been exploring on our other shows on the Monday. So join us for Edwin. The following week, I have Tony Locantro on. So next couple of weeks will be some more Purple Patch guests. So join us for that. And I really appreciate your time this evening. Thank you very much for your questions and comments. Trying to keep track of all the chat as well. And I'll wish you a very pleasant evening, and I'll look forward to seeing you this time next week. This is Martin North from Digital Finance Analytics, signing off. Cheerio.